Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son of
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. That is Fat Man Zoom. The stock market is crazy and chaotic. We made it our mission to help you own it, and it has been a fantastic day for me, Fat Man Zoom. But before we get into today's events of the stock market, hit them up with a starting five.
I don't have it.
That's sorry. All right. That's all right. I got it. I got you. Mysterious Gal, Sam Cisneros, Jason Padilla, Savvy Money Show, Sean Ethier. You are our starting five for the day.
That. What I do have are the topics of the day for our thumbnail pose off. We will begin with camera one, and let me fix my microphone so you can hear me. Check. All right, we got some good topics today.
We do.
The first thumbnail pose is Square and Affirm go off. Woo! What is the deal? Why are they both going off? We don't know. Camera two. The future of buy now, pay later. Is buy now, pay later the future credit card? You're. I don't know if you guys know out there in YouTube land, Brad's first pose is always the chin.
Always this?
Is always to the chin.
Is it always that?
Yeah.
I used to always just be like, thumbs up or. I'm not very creative. I'm a creator that's not creative. Figure that out.
5 stocks that will make you a millionaire. Yeah. There you go. These are 5 stocks that in 20 years, they'll 20x. But we'll get into that. And then camera 3. This one's for me. Rocket Mortgage, go solar, rocket to the sun.
Your mic was all in your face.
Hey, to the sun. No, this one. To the sun. No, I'll be able to pull one of those.
Oh, my God. That'll work.
If you guys are watching our clips, you go through our channel, you can see all the fun thumbnails. They actually have been working out really well.
Yeah, I love it. I love it.
So if you guys love the thumbnail pose, let's just get this out of the way. Hit the like and subscribe. Notification bell helps too, but make sure you subscribe. We got a lot of good stuff today.
Yeah.
Welcome to our live stream. We are here every Monday through Thursday at 3:30 p.m. Eastern time. We got a lot of topics to discuss, a lot of fun stuff, not as much action as far as earnings are concerned, which is a normal Monday. Usually there's not crazy ones.
Yeah.
But we certainly got more throughout this week, so make sure you guys stick with us. But we got these topics. It's probably good there's not a lot of earnings because we have a lot to discuss today.
I will say, and I'm springing this on you, I would like to just give our thoughts on tomorrow's pre-market earnings real quick.
We can. Yeah.
We can do it now or we can do it later or whatever.
Yeah, let's knock it out.
All right, so today we have TakeTwo After Hours. If anybody's interested in that video game platform, if you guys, you might have heard of NBA 2K, not sure, but those are the guys. But tomorrow there's Alibaba, Corsair, BP, which you like, Under Armour, Clorox. I mean, there's some pretty good ones pre-market tomorrow.
Definitely.
I think all of those are definitely worth watching. I think all of those are actually going to probably do well earnings. So again, let me repeat that. It's Alibaba, Corsair, BP, Under Armour, Eli Lilly, I didn't mention that, Clorox. Those are all definitely going to be good ones to watch for. What are your favorite ones out of that bunch?
Baba for sure. I'm in BP. I actually have a stop on it, and it hasn't tripped yet, so I'm still rolling in BP in the long-term swing trading. Yeah. But I would say Baba and Under Armour would be my top 2. I'm sure I'm sure Under Armour's your top 1.
Under Armour is my top 1. We take a look at the chart on Baba. It's had a really decent comeback, man. I mean, ever since we kind of poo-pooed on it, I don't know if I necessarily would say I poo-pooed on it, but that I was just very nervous about anybody
Yeah.
holding it. I mean, look how choppy this has been. The chart on the daily is just absolutely horrid. So it's just like, if you have a stomach for something like this, great. But if you didn't, it still probably would have been worth waiting out. But their earnings are probably going to be pretty solid. I definitely would be looking forward to that one. Then you have Under Armour. We talked about this one. This actually made the watch list this morning if you guys are part of the Chaos crew. And I think that they knock earnings out of the park. Today it had a really solid move, up as much as 5%. Has pulled back here a little bit, but I like Under Armour tomorrow pre-market as well.
Yeah, Under Armour is great. And obviously, we are in Baltimore, the home of Under Armour. We have a lot of Under Armour products, and they've gotten a lot better.
Yeah.
So it's going to be interesting in the long term. So next 5-10 years to see where Under Armour stands then, because only then will you really know how this shift has happened with their new CEO, with their move away from like trying to compete with Nike and really become more of a lifestyle brand. I think they got, I mean, honestly, I'm wearing their pants right now. I think they're better than Lululemon pants. And I really, really like Lululemon pants.
Yeah.
So will everybody else figure that out? We'll see. I mean, who knows? Next year, I'll maybe rocking some Under Armour pants and some Crocs.
Their shoes, I'm obsessed with Under Armour shoes.
Yeah, those fly wires. What were those? The green ones, and then you got the red ones?
I got the red ones on.
What are they called? The
right
Flex?
Here, right here.
The Flex.
Yeah,
I
the
think
Flex.
Yeah.
They're Bluetooth enabled.
They're so light.
They're so light. It's like walking on clouds, and they're Bluetooth enabled.
Actually, AJ, who's shout out to Manuel, and who has a fight this Saturday.
Yes.
So our buddy who's in Manuel is a professional boxer. He's fighting in Philly
Cannot
on
wait.
Saturday, so we're going to be there. But he actually said the Bluetooth in the shoe, he said it's better than the Nike app. So
No shit.
Is it Map My Run?
Yeah. I think so.
He said the interface for Nike's nicer. He said, but functionality, practicality, like the Under Armour one is far better, the data that it gives. So that also might be a sleeper. I still haven't set up the Bluetooth. I tried. I had issues with it, but I'm going to set that up because he was just raving about it last Friday.
Oh, wow.
Yeah, so excited about Under Armour. Baba, I think we've seen all the Chinese stocks kind of sold off, and these are opportunities we're looking at. And I think I was a little bit more bullish on Baba down here below $200, but we talked about this $200 mark, which it's pretty much sitting at right now.
Yeah.
We've heard from the regulators, the Chinese regulators, I don't think they expected such a horrific move. And so I think they're realizing that they need to walk back some of their comments. And I know they're trying to, I don't know what's happening as far as the U.S.-China relations. I feel like there's this power play that's happening, but they realized how much they lost last week. I think they realized they got to be careful with how they go about regulations and really the perception of their companies, because they want companies listed on the New York Stock Exchange. Chinese companies growing only benefits China. So hopefully this isn't going to be the last of regulators standing in, but hopefully this is the last of these ridiculous overreaction type situations. So we'll see what happens. But I think Baba actually, if you got in last week, I think you're sitting pretty to sit through earnings. So we'll see.
All right. So I wanted to cover this real quick. That actually was not a part of the plan, so sorry for jacking all that up.
No, it's all good. How many people we got now?
But we do have 75 of you guys hanging in here, so thanks so much for allowing us to be a part of your afternoon. We got 18 likes. I still think we're on a hot streak, Fat Man Zoom. 5 days in a row, we've had 100+ likes on the channel for our live streams. If you guys can hit that thumbs up button and keep the streak alive, certainly would appreciate it. So thanks so much for the support there. What's our first topic?
5 stocks that'll make you a millionaire. So you had brought this article, which you had saw Motley Fool, and correct me if I'm wrong, but it was stocks that they had said if you put 50,000 in, they would 20x by 2040. So essentially, you would be a millionaire if any one of those stocks hits. So you wanted to throw your hat in and put some stocks in that you thought could essentially make you a millionaire.
Yeah. So the article basically goes out to say if you got $250,000 laying around, you want to put 50,000 in each one of these stocks. One of them could make you a millionaire with over the next 20 years, essentially by 2040. And there's a list of stocks, and feel free to go check it out. Motley Fool is always a great platform. But they had a couple of them that I liked, but I thought to myself, what would it look like if I made my own list of stocks that I thought would essentially 20x my money over 20 years. Now, you don't have to put $50,000 in something if you don't want to, but if you put 5 or 10 into something and at 20x, would you still be happy? I think the answer would be yes. And so I ended up taking it upon myself to create a list of 5 stocks of my own that I thought could 20x over the next 20 years.
All right, let's hear it.
So my first one is going to be Airbnb.
Surprise.
Talk about a disruptor, though. I mean, in the next 20 years, Fat Man Zoom, I think Airbnb could certainly 20x your money. In the next 20 years, I think it could 20x your money. The reason being, in the 3 years leading up to the pandemic, bookings on Airbnb quintupled. So they went up 5 times over the 3-year period. They went from 50 million to 272 million bookings over 3 years, which was absolutely insane. And that growth is carrying over and actually compounding after the pandemic. Right now, you can't find bookings anywhere. I think this doesn't just only disrupt the hotel industry, but also travel itself. When we look at the bookings themselves, that's one thing. When you look at the experiences and the revenue that they can bring in on that side of things as well, that is huge. They have 4 million hosts worldwide. There's 130 million homes in the U.S. alone, well over 1 billion worldwide. So I think that we're still very much in the early stages of Airbnb, and the brand that they've been able to build doesn't really require a whole lot of marketing on their side, even though you've seen commercials here and there. It's not like you see some other things. So I just think that Airbnb could be a huge winner for anybody who's looking to invest in this long term.
It's hard to consider what will Airbnb look like? What will it look like in 20 years? Will it be around? You hope it be around. It seems likely. They weren't the first to the space, but they were the first to execute it properly.
Yeah.
Vrbo's trying to come back, but really I feel like they're just riding off the coattails of Airbnb.
Yes.
And you got Booking.com, which is trying to get into the space. But I think the barrier to entry is going to be high for these competitors because as you get these, Airbnb's built a good brand. Not saying it's not without its issues, but overall, I think it's built a very good brand, a reliable brand. They're only getting better. Airbnb Plus, I think, is going to be a huge component of that. And if you look at all these like peer-reviewed sites, not just hotels, but if you look like the Yelps of the world, TripAdvisors, Airbnb is probably the best as far as the reviews and what you actually get and being aligned. I trust if I see something that's an Airbnb Plus, I trust that it's going to be what I'm expecting. So I love it. I mean, we both love Airbnb, and I do think it's going to be around in 20 years, and I do think it's going to be dominating.
As much as this has come down, I think this is a good opportunity. If anybody was looking to get into Airbnb, I don't know how this comes down a whole lot lower from where it's at. It's trading around 28, I think, times its forward earnings for next year. So I think that this is going to be a good one longer term, regardless, wherever you get it at. I like Airbnb. My next one here, Fat Man Zoom, is going to be, shoot, I just lost my spot. Square, sorry, Square is going to be one that you could buy and 20x your money in the next 20 years. A couple of things here with Square. In the 7 years leading up to the pandemic, Square's ecosystem, their sellers' ecosystem, their annual gross payment volume, which is the GPV, it went from $6.5 billion to $106.2 billion. That's accelerated even more because of the pandemic. It's now over $130 billion. Mm-hmm. So just massive growth there on that side of things. And then you have Cash App, obviously, that has the opportunity to create multiple streams of revenue. Their exposure to Bitcoin and cryptocurrency on that side of things, which we know is not going anywhere and could be argued that it's still very much in its infancy. Then you also have that we just heard about the acquisition of Afterpay that took place yesterday, or that was announced yesterday. And you could see that this could be the fintech company of the future. I could easily see Square and PayPal being referred to in the likes of a JP Morgan and Goldman Sachs. I do think that caliber of oh shoot, I just lost my train of thought. That caliber of just like clout,
okay,
that could be in the same conversation. Is all I'm trying to say.
Okay, yeah, I like that one. I mean, I'm still a PayPal fan because of the brand, but because of certain things around the brand and how they've built it, because it seems like they're attacking in two different angles. However, when you look at growth, PayPal is further along in the growth life cycle, so Square would be a logical one if you're thinking about 20xing.
Square's up 10% today. It's pretty wild.
Mm-hmm. We'll get into that.
All right, so Teladoc is going to be the next one. Now, I know this one is a little bit interesting because Teladoc still hasn't been reporting profitability. They're losing money quite considerably. Each quarter we see this, and every quarter it's just like, this sucks. But the future here in Teladoc, I think, is there. You look at the virtual visits side of things. The pandemic obviously shed a lot of light on that and exposure to virtual visits and just the convenience of them overall. You got a sick kid that you don't want to wait at the doctor's office for and catch God knows what else. That certainly is a perk. But not only that, but their acquisition of Livongo, if you guys didn't catch that a couple quarters ago, they acquired the artificial intelligence company that keeps track of people with chronic illnesses and helps them get into their checkups, regular routine maintenance on, just medicine and that sort of thing. I think this is going to be a huge one. This, in my opinion, is the future of healthcare. Virtual visits. We talked about Zoom visits and that sort of thing as far as visiting with your doctor. I think that this could potentially be a huge move for them. And this is why Kathy Wood loves them. Then again, just another disruptor that I think 20 years from now could be a household name and something that we all know and love. And we're seeing them in hospitals today with a lot of their other stuff. It's pretty amazing.
Yeah, that's a great call. I love it. I love what they're doing. And everything's going digital, so Teladoc should benefit. How's the chart looking?
With Teladoc, the chart's been pretty rough, but I think the opportunity here could be pretty good if you have the patience to wait for a decent turnaround, which I think they will. Eventually, there will be a path to profitability here. And, where do you grab this? Well, if you're holding on to it for 20 years, if that's the plan, it doesn't necessarily matter where you get it in at. You look at it, you buy it, getting a starter position, and you add to it into weakness. And I think that you just let it go. I think Teladoc is going to be a good one to hold long term.
How many is that? 3?
We're at number 3. Yeah. So number 4 is going to be CrowdStrike. CrowdStrike, in my opinion, is going to continue to grow. It's been around for a couple decades. We look at the ransomware issues that we've been seeing and the stay-at-home trend that continues to accelerate the hybrid approach. This is where CrowdStrike is going to continue to do well. They have an AI platform called Falcon. It actually monitors and checks in on 6 trillion events that happen each week. 6 trillion. And so that is a really amazing. The AI side of this thing is what really attracts me. And in that sense, it could be argued that is a disruptor, their Falcon platform. So I think this is going to be a really great company to hold on to for the next 20 years.
And last, but not least.
So the last one, but not least, actually is not a stock at all. It is a cryptocurrency, and that's Bitcoin. Since its inception, it's grown 200% year over year on average annually. And so I think that if you feel that this is going to be a good one to continue to hold on to it as a hedge against inflation, against the dollar, then I think that Bitcoin is going to be a solid one to hold on to. Could we see this at $1 million within the next 20 years? I think that the way that this has been accelerating, you could certainly see that.
Well, with the way it's set up with the scarcity model, if crypto stays as viable, it certainly could do that. And it's set up to continue to grow in value as a store of value, which a lot of people buy Bitcoin because of that. So that's a good call. Do you want to show the chart?
Yeah, sure. So Bitcoin's chart right now has actually been doing really, really well. It's bounced back pretty considerably into the 40K mark. A lot of people are excited about that. Had a little bit of a pullback today, but it's still looking a lot better than it did. Let's go ahead and I'm going to bring it up on the daily. Boom, there you go. I think what I really would be encouraged by, we always talk about this, that crucial area at the 200-day moving average, which is around 45,000. I think that if it hits up over that, then we're going to be in good shape for Bitcoin. But again, this is one that you're going to want to buy and own over the next 20 years.
And we didn't show the CrowdStrike chart, but what I did, who said this? Oliver, no, it wasn't, Ivan Broski. I did want to say this, and I'm glad you mentioned it. You guys never talk about cybersecurity. Whoever said that nonsense comment before we ended last night,
yeah.
Like, what are you talking about? It was at the very end.
Yeah.
Yeah, Savvy, that was a joke. Ivan was just mocking somebody yesterday who said, you guys never talk about that, and that's ridiculous.
Yeah.
No, I mean, I think, and we talked about this when the pandemic started back up. Sorry, when we reopened, which was like, so cybersecurity is not going anywhere. It's still a huge issue.
Yeah.
The question really is, who's going to be at the top? right? Who's going to be the last company standing or the top two companies? CrowdStrike definitely in the running for that. Tesla is not on this list, but I'm sure would potentially being in the running for 20x in 20 years.
Yeah. The other thing about CrowdStrike, 90% of their customers are sticking with its services. 98%. That's incredible.
That is insane. All right, moving on. Rocket Mortgage. Rocket Mortgage, man, I wanted to put this thing on the list on Sunday, and I decided not because
we literally talked about it.
We did Zillow instead, but Rocket Mortgage had huge news. They're going solar, folks, and I think this is rocket to the sun. Maybe.
Screw the moon.
So there's news today. It goes up. Where is it at right now?
Right now, it is sitting at around $18 to $17.99. Had a pretty big jump to $18.65, but has pulled back.
So it was announced today that Rocket's diving into the solar field, and basically they're taking their technology, Rocket that is, and they're offering refinancing services. So this is a logical linkage between home ownership and solar panels, which typically homeowners are the buyers of solar panels. So what they're doing, so if I can break this down as succinctly as possible. So when you buy solar panels, one of the key benefits is that you get a federal tax credit.
Yes.
And this is what's really cool about this offering that they have. So what Rocket's going to do is they're going to allow a refinance vehicle, a loan vehicle, where essentially you can tie your loan, your home loan, your mortgage in with solar financing. So it's essentially refinance. So as far as I understand it, obviously you can do this with a new home that you buy and then you tie that together.
Yeah.
But more often is you buy a home and then you buy solar panels. So instead of having separate financing, you can actually refinance your mortgage and put the solar panel in it. Here's why it's good is because typically the Market Watch actually put an article on this. They had mentioned that the federal tax credit typically has to go towards the actual financing, right? So the principal.
Right.
With the way Rocket Mortgage is doing it, you actually don't have to use the federal tax credit to pay it off. You can pay principal off, but you don't have to. Where private loans, you would be disqualified for the federal tax credit. And so this is awesome because you get to finance it and then you get this free cash that you can use for whatever. So this is, I think, the key piece of it. So my question to you, Brad, is, does this move the needle for you? Obviously, there's some issues surrounding home buying. Is Rocket a buy? And what do you think of this move?
I think the move is great. I'm not sure if it's a buy yet. I still like the stock. You guys know that Rocket's been something that we've loved and we made a bunch of money on previously. I'm still a little bit concerned about the home side of things because ultimately that's what matters to investors. It doesn't necessarily matter about anything else. So I think that while this is a great thing, another opportunity to bring in revenue for the company, I do think that this could be one of those days where we see a little bit of a correction after a pretty solid move up.
And they're looking to launch this in early 2022, so this isn't going to be hitting any of the earnings until 2022.
Yeah.
If it even does do it, if it actually successfully launches in the early 2022, who knows? But I would tend to agree. I don't know how much it's going to move the needle. It is essentially kind of like icing on the cake. It's nice, a little bit of extra revenue, but if housing's not there,
right,
then it won't matter. So I agree with you. Guys, that was short and sweet, but it's still worth a like and thumbs up. If you like this, go ahead and hit the like button. Don't worry about subscribing.
Why?
I said it, but I didn't mean it.
I was like, what are we saying right now?
I don't know. I'm lost. Go ahead and subscribe as well.
Yeah, please do that. We're about halfway through to our goal for the day. Almost 50 likes. So thanks so much for hitting the thumbs up. We're trying to keep the streak alive. We're a week into it. We're about, 5-day win streak will be today if we get 100 likes. So thanks so much for that, guys.
What do we have now?
We have 130. We're at 52 likes.
Okay. All right. Do you want to try to squeeze this last one in?
Let's do it.
Well, it's not the last one. We got two more, but squeeze one in real quick.
Yeah.
So the Future credit card, the future of the credit card is buy now, pay later. The Future credit card, and you've discussed this. this is very timely. We're going to talk in a second about Square and Affirm, why they went off. But the reason why this is top of mind is because Square just announced yesterday the acquisition of Afterpay, Australian-based company. So rather than Square creating this homegrown system, they just went out and bought Afterpay. That's not the point here. The question is, it looks like everybody's moving towards it. So Apple just created a homegrown buy now, pay later. PayPal already has it. Affirm we're big fans of. Afterpay has done really well. So we're seeing everybody move towards it. Visa, MasterCard could be next. You have a theory that you think this is potentially the future credit card. Let me know.
I do, because if we look at the way that everything is kind of moving with e-commerce and I mean, I don't know about you, but I hardly ever carry cash on me anymore. It's very rare that I have any kind of cash on me. And so I think that this is just a natural progression that we just get rid of the credit card altogether. And I almost kind of think that buy now, pay later is essentially the same thing. It's just a digital version of it. And so if you guys are looking at the way that this is kind of progressing, I think it only makes sense to see how this could potentially evolve into that, maybe even with over the next decade.
Well, so what's the difference? The thing to me is buy now, pay later and credit card. In theory, they're similar things. You're borrowing money and there's a rate attached.
Yeah.
But what if you're a credit card company? What are you saying, that credit card companies don't offer the services? Because to me, they're similar in how they look, but they're actually different. Like, you carry a standing balance. You have buy now, pay later is not, you have this money. Buy now, pay later is you're going to buy something, and we're going to front the money, and you got to pay that off. It's a very binary option, and you can continue to do it. But once you pay off what you bought, you're done. You could do it again, but you're done. A credit card is essentially a line of money. Like, we're going to give you this money and you could continue to draw from it, pull in, pull out, and you have a certain amount you need to pay, or you just pay it all off and pay no debt. So to me, yes, they're borrowing money, but they're different vehicles.
There's certainly different vehicles. There's also, I mean, there's a lot of similarities. Like, Affirm approves you up to a certain amount. So you can like buy up to a certain amount and then just continue to pay it off. Whereas like credit cards, they have a credit limit. They do have cash that you can use, but there's a limit to that. So I think that there's that side of it too. I think they're more similar than they are different.
Yeah, they're similar. I think either buy now, pay later becomes offering that. But I would say buy now, pay later turns into credit. Like, I think knowing humans and how they interact, like, I don't want to give my information every time I do something. Now, I could have one company that continues to allocate. Physical credit cards will be gone in the future. I just don't see, I mean, Amex does this. Amex is actually like a charge card. They're not traditional credit card, how it works. So I would say, knowing humans, like, I just want to know how much I can spend, and I'm going to spend it. And so I hear where you're going with it. I just struggle with the fact of, like, a physical credit card can go away, but the theory of like going to a bank and being like, hey, I need, like a credit card company, and being like, hey, loan me money, I want to spend it. People are always going to take that. I think people are going to take that option. I think buy now, pay later is sort of like a secondary option.
Do you think that demographics has a lot to do with it? Because, like, I could see this being something that younger people gravitate more towards this than credit cards, especially if they're already buying stuff online.
I think I can see people doing both. I don't think people will stop. I don't think people are going to turn away credit cards to do this. Because the other thing you got to remember is, could buy now, pay later do it? Yes. But you got to remember, I hold a credit card because I want free flights. I want free flights.
Yeah.
Affirm ain't doing that for me
yet.
Will they eventually do it? Maybe. But they also don't make the type of money that credit card companies do make. And that's really, we haven't seen the model proven yet.
The margins, yeah.
Because you look at Affirm and they're losing their ass.
Yes.
I mean, if you want to be honest.
Right.
Afterpay, you guys love Afterpay. You like that move. They're losing money too. So, like, it's not that this is such a great model yet. It remains to be seen. There's probably a better way to do it. But the people that are good with credit cards are the ones that are like, oh, I want the rewards and I'm going to pay it off every month. The people that make credit cards successful are the ones that are like, that pay the minimum, and then slowly that interest loads and loads and loads and loads.
And that's how they make their money.
That's how they make their money. Now, the question is, do people become smarter with their money? Because buy now, pay later is better. And I agree with you. Younger people would potentially do it because they may only get a line of credit of $500. However, I don't see people getting smarter with their money.
No.
That's the problem, is people aren't going to get smarter with their money. They're going to see, hey, I can get more and more, and I'm just going to max out whatever credit cards I have.
My main point to the buy now, pay later is just the convenience of it. If I can have it now with something like Affirm, and it just makes it easier, and there's not that pain receptor that comes in by physically giving my card or what have you, I think that's probably what things evolve into. And I agree. I mean, like, American Express, MasterCard, Visa, they're going to figure this out to make it even easier for you to buy shit, and they already are. But I think that there's definitely a space for this, and we'll kind of see how this evolves. But we would love to hear from you guys. Let us know in the comments below what you guys think about this. Is the credit card going away, and could it be as a result of the buy now, pay later trend that we're seeing? Let us know down below, and give us a thumbs up, guys, if you're enjoying the stream so far. We're at 67 likes. We're almost there. We got about 32 to go.
Oliver Thorpe says people are too greedy and want everything right now to get smart with their money. Yeah, I agree.
So true.
I agree. The phone is the future credit card. That's my prediction.
Oh, yeah. Yeah.
I mean,
I agree with that.
You don't need a physical credit card. I think everybody can agree that you don't need that. You type that in. But
yeah,
my phone's just going to do everything. It's just going to literally.
It kind of already does.
It's almost there.
I could just swipe your phone. Boom. You just paid for it. Done.
All right. Market is closed. I actually haven't been paying attention to the market.
Market was rocking and rolling today. The Dow hit record highs. It did not close at record highs, but it did end up hitting record highs, and is rocking and rolling. I tell you what, it sure feels like July is behind us, but we'll see how this plays out for the rest of the month. Guys, I mentioned on Stockwatch Sunday that some of the July chop could carry over into August, but I think that we are definitely on the mend. The worst part of the choppiness that we saw in July is probably behind us, but nevertheless, pretty decent day overall. My account was up pretty nice and green.
Yeah, Don says, wait until there's a chip in your arm. Won't even need a phone. Swipe your wrist. Wait until the metaverse. Can't wait. We still got to talk about the metaverse.
Yeah, AI day.
Hopefully we can talk about the metaverse on Thursday with Facebook.
Yeah.
So last topic, guys. If you guys haven't been here before, we've got an awesome community of people that we call the Chaos Crew, and they're members that join through the YouTube channel. So if you go to the YouTube channel, actually the join button's next to the chat, next to subscribe. Click that. We got a whole bunch of features for it. You get a daily watch list. You get alerts. You get access to Brad's portfolio. You get all this stuff. But I think the best thing we have is the Discord. So you get access to our Discord where we chat. And our community was kind of going back and forth with this Square Afterpay acquisition.
Yeah.
And I just wanted to talk about it because I think that when you deal with a stock like Square, and Square is one you've had high conviction on, it's one that's been on a watch list numerous times, and we've been very bullish on it.
Yeah.
And I think our community is very bullish on it. I think it's easy to just kind of like knee-jerk have a response to it. And so everybody was kind of debating what the reasons were, why it was moving. But then so let's remember, Square was down pre-market, almost 5% at one point. Mm-hmm. It ended up green. Massive move up 10%, and Affirm, which is another Chaos Crew favorite, which is a stock I really like, we just talked about. Affirm goes off.
Yep.
And it goes off even further than Square does. And so I want to talk about that and sort of what your reasonings, what your thought process are behind it, because I have some ideas behind it. But more importantly, I just want to go over not just that, but some people brought up the fact of well, why is Affirm going off now if the Apple acquisition, or Apple, when they announced that they're going to actually build the system of buy now, pay later homegrown, if it doesn't go off? So I wanted your thoughts on that. I have some general thoughts, but did it surprise you when Affirm and Square were both moving? And what do you attribute that to?
Yeah, I was pretty surprised at the rate at which it moved. I wasn't expecting a 10% move out of Square and a near 20% move out of Affirm. If you guys didn't catch the news, Square bought Afterpay for $30 billion, almost $29 billion. and that is 42 times its PE. So that is a huge premium that they're paying for Afterpay for a company that's losing money on this concept of buy now, pay later. And so you get to thinking, why did this go up? I think that for me, I think one of the initial reasons is that one of the major companies is buying into this concept. Now, obviously, Apple is looking to create their own, but I think that the fact that Square's dumping this kind of money into Afterpay, it's just interesting to see this develop. You have the amount of money that went into this just kind of, I guess, solidifies the fact that this is potentially going to be the future. And even though that they're losing money now, I think that this is the type of disruption that we could see in the quote unquote credit industry. And that's probably why we saw a pretty decent move from both of these.
Okay, let me stop that. I want you to list all of them, and I want you to compel me. So I'm just the person sitting here trying to decide, and I'm saying, Brad, convince me. So let's give each point, and if you miss any, I'll add to it. But I don't buy that. And the reason why I don't buy that, while it does seem to make sense, is, well, Apple, there's no bigger company than Apple, then it should have moved like that with Apple.
Right.
All right, so then what's your next option?
Well, there's the barrier to entry. So your argument with Apple is that Apple's starting it from scratch. And if there's anybody that can do it, it's certainly Apple. They have the funds. They have the ability to do it. But if you can buy something that's already there and it's already in the market, that certainly makes the case for that.
Not for a firm. Well, I'm just saying you're not compelling me. So it's a debate. So I'm saying that doesn't compel me, because a firm should, like, if that was the reason, Apple would have convinced people, not Square. That's just that's my point. So we can disagree, but I'm just saying, what are the other cases that could be made? And what I'm doing with this is, I want people to understand is, it might not be your first thought. So I don't care if we agree or disagree.
Yeah.
I want you guys to understand that there could be more than one bull or bear case. So what else do you got?
I think that this could be... It's interesting. I'm not quite... So there's a couple of things. Obviously, they have earnings that's coming up, and I don't think that would have caused a 17% move.
Yeah.
But there could be a combination of things.
Well, you talked about market cap. So you had said that Afterpay was acquired for $30 billion.
Right.
And so...
Which is 42 times earnings.
What their market cap is... the market cap for a firm is $15 billion. So it's half of that.
Yeah.
And so when you look at both of those, the other argument can make, and there's been articles on, is now a firm basically a takeover target, right? So like, could somebody spend, money for them next? Visa, MasterCard seem to make a whole lot of sense for like, well, should we home grow it, or like, let's just buy a firm and let's be done with it?
Right.
Those type of companies are the companies that like have cash on hand and could make those moves.
Well, the other argument here I think you can make is that if Square sees that kind of value in Afterpay, what does that then make the valuation for a firm? And so that obviously could be a logical reason that it moved up.
Yeah. The one point I do want to bring up, and for those people that were talking about Apple versus Square, this is not the same. It's just not the same.
Yeah.
And so when you're, I do want to bring up the last point, which somebody in the crew had mentioned. It was Ross Matthews had brought Motley Fool Australia a YouTube video, and they said that this Square deciding not to do homegrown shows that there's a moat. I don't know about all that, maybe, but that's another argument. But the reason why it's different and why a firm could potentially go off is because it's consolidating the competition.
Yeah.
Right? If Square decided that they were going to home grow, I don't think a firm has this move, because Afterpay still exists. They still have that competition there. And now Square is a whole new person to the market who has a critical mass of people through Cash App that they can leverage and they can promote. Yes, they're still going to do that, but Afterpay is now gone, right? Like, or like it's out of the picture. I don't know if it's going to run through Afterpay or not, if it's just going to be Square, or if Afterpay still exists. That doesn't matter. It's still going to be one company.
Yeah.
And so Apple is a whole new competitor to the market who's going to have access people through their credit cards. So if MasterCard or if Visa do a homegrown...
You said do.
I think a firm would go down. So I don't know what the answer is, but to me, the most compelling answer is that the competition is consolidating.
Yeah.
And that's good for Square because it should do well. But Affirm that's good for as well because they're already ahead of the game and Square's now got to build it up and do whatever. So for the short term, I do think this makes sense for Affirm. And they're in a really good position. To me, this Shopify acquisition, the Shopify partnerships with merchants may not show up this quarter on September 9th when they have earnings, but next quarter we will. And next year, I think it's going to be huge.
Yeah, the stigma around Affirm right now is obviously how heavily leveraged they are in Peloton. It's their biggest revenue driver. I think it's somewhere around 30%, I want to say. Maybe even more than that. Somebody correct me if I'm wrong, but I'm pretty sure it's around 30%.
Yeah, it was 32%, I think was what I saw.
Yeah, so I mean, that's a huge, that's obviously major. You know, we saw how that impacted something like Fastly, right? When people knew that TikTok was 10% of their revenue and how that impacted them when TikTok went through that scare of being dropped. But, you know, it makes sense. Competition hasn't necessarily increased. The market hasn't gotten crowded. It actually got smaller today. So that definitely makes sense as to why it could have had a move, but like this. I think the biggest reason is the potential for this to be acquired. Because I think that anybody, Facebook could acquire them. I mean, any of the big players.
You literally just gave it away. I was going to tease. I was like, we should do a clip on because you talked about Shopify, which could be. MasterCard and Visa are the easy answer.
Yeah.
But there are other companies. And you mentioned Shopify when we were offline, which they already have a relationship. If Shopify sees its good numbers, why wouldn't Shopify be like, you know what? Boom, let's scoop it up.
Yeah.
But Facebook Marketplace, Facebook has a hell of a lot of cash on hand. A stupid amount. Square does not have cash on hand. That's why they had to do an all stock transaction. They don't have a lot.
Yep.
And so you talk about Facebook, they got stupid money. Facebook Marketplace, which is similar to Shopify. They have a community. They have all that stuff that I think makes a lot of sense as well. So don't just think that Visa and MasterCard are the only ones in this game. There's other ones in there too.
Savvy Money Show brings up a good point. Affirm has 100% retention rate for business customers and 69% for personal. That's pretty amazing.
That 100%? Wow.
For business customers, yeah.
That's incredible.
Yeah. I mean, they're still new, so I mean, obviously you know, but still, like that is.
I think Facebook's going to be the one. The more I think about it, Instagram shops.
Yeah.
Why wouldn't you have a buy now, pay later service?
Exactly.
Maybe if Zuckerberg's watching, he realizes it's probably a good acquisition. Spend that money.
Go buy them up, Zuck.
All right, guys. Well, that's the last topic, and we want to get into earnings. But that's the last topic, guys. Like and subscribe. And if you want to join the Chaos Crew, like I said, it's only It's $4.99 a month. I was going to say $5.99. It's $4.99 a month. It's really worth the value. And if you don't believe me, the guys in the chats will tell you. You won't regret it. So click that join button.
Yeah, we'd love to have you guys as a part of the crew. All right, so TakeTwo came out with earnings, and they smashed it. Right now, it's trading down around 4%, but they came in and on earnings and beat on earnings expectations $1.30 to the 93 cents expected. Revenue came in at $813 million versus $686 million expected. So those numbers are monstrous. And I got to be honest with you, Fat Man Zoom, I was not expecting this kind of monster numbers from them, especially from what we heard from Microsoft's earnings about how things were down with them as far as Xbox users and that sort of thing. So it's down 4%. I wonder if maybe they lowered their guidance a little bit because maybe of what we talked about with Microsoft.
Yeah.
I'm not quite sure on their guidance just yet, but they crushed it on earnings.
That's awesome. Yeah, I mean, we've said it's guidance, so we'll see what they say about the guidance. Can you pull out a little bit? Pull out the chart a little bit?
Yeah. So this is the daily chart right now.
Okay.
It actually had a pretty decent pullback from its highs at 215. We'll call it 215. Wow. So yeah, and now it's down another 6.5%. I think the summer months are going to be tough anyway, as is, because obviously everybody's was already itching to get outside because of the pandemic. But now we have warmer weather and people just want to be outside. This obviously is more or less of a seasonal type stock. This could be a really good opportunity late summer to scoop some up. I think that if it does end up coming back down to and holding up above 162, that TakeTwo could be a really good buying opportunity here. I would have to hold up above that, but I really like that at that level.
Nice. Somebody's asking about Drive Shack. I thought they had earnings today, and I'm not seeing them.
For some reason, I thought they were tomorrow.
CNBC says August 2nd. TD Ameritrade had August 2nd, and now there's no date. So I don't know what's going on. Somebody also said, Shock City Record said August 10th. Yeah, Yahoo Finance said they're out today. Yeah, I don't know what's going on.
Rudy Brown says in the morning. I thought they were in the morning too.
I mean, I would be more confident in that if I saw anywhere that listed.
I know, yeah. Let me check in on Drive Shack. I thought Weeble told me they were tomorrow. Let me double check.
And I'll check Twitter to see if anything's on Twitter as far as like numbers out.
Yeah. Yeah, I got nothing. Nope. Nothing on that, but as soon as the Drive Shack numbers do come out, obviously we'll be able to share that out. So I'm sure that one of us could make a short on it. So make sure that you're subscribed, hit the notification bell, but also consider following us on social media at FatmanZoom, at Own the Chaos on Twitter. That's usually where we're most active as far as our stock chats are concerned. So make sure you go follow us on socials there too. So as soon as that comes out, we'll be sure to share it. But most importantly, if you guys want to be a part of the Discord group, that is the very first place that we'll be sharing that. So make sure you hit the join button next to subscribe if you want to be a part of the Chaos crew. And we are 11 likes away from our 100 like streak.
Come on, baby. Let's go.
We have 89. So if you guys can give us a thumbs up if you're enjoying the stream, if you are visiting for the first time, if you are in Drive Shack, give us a thumbs up, all that stuff. Let's keep the streak alive.
Yeah, and tomorrow, as a reminder, we'll be here tomorrow at 3:30 p.m. Eastern time. We got earnings again, so we'll be discussing pre-market earnings. As a reminder, pre-market, Alibaba, Corsair Gaming, BP, Under Armour, Eli Lilly, Clorox, couple other ones, Marriott. Don't know if but there's some good ones in the morning that we'll certainly be discussing and expect some movement on.
Yeah.
But after the close, we do have a few. We have Lyft, we have Skills, we have Activision. Those are some that actually we'll be looking at after earnings. So, guys, make sure you come back tomorrow at 3:30 p.m. Eastern time.
It's going to be another big day, another big week, really. I mean, it's not going to be as massive as some of the big FANG stocks, but it's going to be a big week nonetheless, and I'm looking forward to it, Fat Man Zoom. We just hit our 100 likes.
Nice.
So the streak is alive, so thanks so much for that, guys. And that's going to do it for us. We'll be back here tomorrow at 3:30 p.m. Eastern time. Y'all have a great night.
Bye.
Peace. Bye. Bitches.